All right. Welcome back to another episode of the Lender Podcast. My name is Bryce. And today we've got Marty Chera. Actually, Marty, am I saying that right?
Yep, yep.
Is that
Marty Chera.
perfect?
Yeah, hi.
Yes, we've got Marty Chera as a guest speaker on the podcast, and we met on LinkedIn, and I am super stoked to have Marty here because he's got an interesting take on some things. I'm excited to ask him some questions. So Marty, first and foremost, welcome for being here.
Thank you so
Um,
much. Pleasure being here.
Go ahead and kind of introduce yourself. Give us the spiel, your background, your elevator pitch, and then we'll dive into some questions.
Sure, sure. So Marty Chera, 60 years old. Been doing lending for about 13 years. The first 4 years we were loan brokers, me and one of my sons, and then thank God the last 8 years we've actually became a direct lender that specializes in fix and flips, ground up construction, 30-year perm, whether it's a 1 to 4 or a commercial property. I'm an ex-retailer in the boroughs of Brooklyn and Queens and the Bronx. That's my retail stores were at. But when I was younger, my 20, 30 years old, I did some small fix and flips, but there was no hard money then, and I used, believe it or not, American Express, Centurion Bank. They actually gave out a checkbook, unlimited amount, and that's how I bought my properties years ago.
I love it. You're starting to date yourself, Marty, but I won't.
Yeah,
That's great. I love it.
yeah,
I love
yeah.
it. Okay. Okay.
Yep.
And so let me ask you this. You said that I assume you're primarily in New Jersey, but you also mentioned that you lend out in Dallas. Those are two very distinct, unique geographic areas. So why focus on Dallas as well?
No, so my properties happen to be in Dallas. We're based out of our headquarters is New York, Brooklyn,
Okay.
and we also have an office in Jersey. But we lend all over in 46 states.
Ah, okay. Okay.
Um,
So you're
I got
basically
out.
nationwide.
Yeah, yeah, I've done nationwide. Many years ago, I didn't like New York for a lot of reasons. Investing, just for investment purposes, the laws from a landlord have been difficult many years ago, and only getting more difficult every year. So I focused about transition about 10, 15 years ago. I bought some multifamily projects with some of my friends, and some of them I'm a co-GP, some I'm an LP, and that's what I've been doing lately. It's a very landlord-friendly state, and it's a very growing state economically, and job growth, and also economic growth, job growth, and population growth. So that's one particular state that I like for investing.
Amazing. Amazing. Okay. So let's can we dive into like the specifics of your company? Give us like a overview. Like I know your company's name, but give the audience just like a brief overview of typical like LTVs, what you primarily cater in. Like I know you mentioned like you do a little bit of everything, but like are you heavily focused on single family? Do you do like some small balance commercial? Like what's your bread
Yeah,
and butter?
yeah, great question. So on the fix and flips, as a nationwide lender, we can go up to 90% of the purchase, 100% of the rehabs, loan to cost, which takes the purchase price and the rehab. We can exceed about 90, 92%, meaning we can give a borrower very high leverage. We're not credit sensitive, no financials, and that's on a typical 1 to 4 property on the hard money fix and flips. 12 months, interest only. Depending on the sponsor, which is the borrower, rates could be anywhere 10, 11, possibly 12s, but we're not rate sensitive because it's so short term. We pride ourselves, we're number 3 on Forbes this year, by the way, for being a
Oh wow.
lender that has the most variety of products of financing and with a very quick closing turnaround time. We got our heavily deal volume is in New York, New Jersey, Texas, Florida, and South Carolina. So those are our 5 primary states that we focus on and do a lot of deals, but we do random deals all over.
Wow. Okay. Okay. Man, that's very diverse. What's your like average loan amount if you had to say? Because I know like New York, New Jersey, like those areas are quite expensive.
Yeah, yeah, it's a great question. So, typical loan amounts on a fix and a flip, 1 to 4, depending on the state, because some property values are lower. Like Jersey, 300 to 500, a typical loan amount. New York, I would say a typical loan amount starts at $700,000, $800,000.
Wow.
So that's where it goes. Yeah, because you're not going to find a house in New York for 3, 4, 500,000. It doesn't exist today. It doesn't exist.
Totally.
Yeah.
Absolutely not. Okay. And then you said you are a direct lender. So selfishly, I've been asking a lot of our podcast guests this question just because I'm newer in the space. So our lending business, we're pretty small. We've got about $2-3 million that we're lending out. So I know, relatively speaking, that's pretty small compared to a lot of people out there. Take me back to kind of the beginning. Like, where did you primarily find your capital? Are you like friends and family? Are you lines of credit? Do you have like relationships with banks? Like, what's your secret sauce?
Yeah, good question also. So when we first started, the first 4 years out of the 13, we were just brokering deals to lending home, lending on, and things like that. Our first funds, two funds, were private investors, families and friends, went to them, gave them a very high pref because we were hungry and we were desperate. So we gave them a very high pref return on their capital. After a certain amount of time, it's all about your loan volume, but it's not just your volume that institutions and private capital and family offices and wholesale lines, credit lines, repo lines want to see. It's not just the volume; they want to see the default rate. How are you underwriting? Are your deals being executed? Are they being paid off promptly? So my son, David, is very, very meticulous from years ago until now on, looking at each deal carefully to make sure the exit is safe, profitable, successful. And sometimes we tell our borrowers, it's just not a good deal. We don't want to lend you. We see very, minute or very low profits or nothing at all. Why would you do the deal? And they're just so hungry to get the deal, but a good lender would provide them with that value and education and experience, showing them that here's losses sometimes. Why would you do it? Now, for good borrowers, top tier one borrowers, we will still lend them on those deals that just don't make sense because somehow they know what they're doing and they have a very good track record, whether it was with us or just themselves or some other lender. They have a good track record, so we'll take that financial risk, and thank God we've, the default rate in this industry, that's what I'm told, I believe is on a low of 3 to 5 to 7, somewhere around there. We're I believe in that 2 to 3% range.
Oh
So
wow.
that's a very good number. Yeah, my son is super careful. Listen, are there mistakes? Always. Are there bad people, bad loans? Of course. But the source of capital will come by you raising the private capital yourself, and then eventually once you prove to the capital markets what you're capable of doing. And again, it's not just volume, it's your loan tape, your default rate, and profits on each deal and profits with each borrower executing their deals.
Gotcha. Okay. So they take like a holistic picture of your entire lending business, and they say like, look, are we confident in Marty and his business model as a whole? And then from there, that's when everything kind of
Yeah.
opens up.
Yeah. I mean, just to expand it a little bit further, you're always going to need a line, which is your debt, and then you're going to need equity, which is your private capital. Today, I'm happy to say we have our first 506c, where accredited investors put into the fund, and they're getting now a percentage, not on their money, they're getting a percentage of our profits into our sister company, if that makes sense to you.
Interesting. So that's actually very unique in the industry because most funds, like for example, we have a 506c. We just pay investors a flat rate. Can you dive into that profit share a little bit more?
Sure, sure. May I ask what you pay your investors on that 506c?
Yeah, so we're anywhere from 9 to 12%, and we take we take a spread on that. We typically loan out around 14% with some points up front, but we have it in tiers. So, for example, like we pay investors who have 50,000. We start at 9%, and then we have some different tiers going all the way up to 12% if you invest 250,000 or more with us.
Got it. Okay. So it's 9 to 12%, and it's paid quarterly. Is it paid monthly?
We're a little unique actually. We pay it as the projects complete. So we try to stagger the projects, so that investors are not waiting, 6-8 months for a project to complete before they see a payout. So typically they're seeing a paycheck every 6 to 8 weeks or so. But no, we don't do like regular disbursements, if that makes sense.
Gotcha. So each investor of yours is investing into the project, not to the fund, it sounds like.
Yeah, so it's interesting because we do still like behind the scenes, all the capital is pooled, like it is in a fund, but we still logically separate the capital for each investor on the individual projects. Just because we have found that investors feel a little bit more comfortable with that when they, even though their money isn't really specifically in that project necessarily, they there's a level of comfort that comes from knowing like, okay, these are the projects that I'm invested in and I want to keep my eye on, rather than it's like amorphous, like my money is somewhere floating around somewhere.
Got it. Got it. Okay. So when our first two private funds, it was just to the fund, and then we took that capital and invested into many deals. Our new 506. So on the fix and flip now, we really don't even need anybody's capital because we have many lines that we could use all the debt to fund the whole entire deal. And then we trade it in a matter of weeks. So that's what we do. So we really don't need any private capital. I'm happy to say people are throwing us their money for the hard money, and we just thank God we don't need it at this point.
That's
Uh,
great.
so now on our 506C, we're doing it strictly for the debt DSCR loans, and we're offering them. That's why I said it's like a sister company where any financing that we do on that sister company, the investors will get 15% of the profits of the company. We take no management fee, and we're not even expensing normal expenses like a partial rent, partial payroll, partial, things. We're not even doing that. So if you really think about it, that return is probably 30, 40% that they're getting because we're not even taking out, all those legit expenses.
My goodness, wow. Let me just shut down my operation, and I'll just give you all of our capital. That's
Yeah, we definitely have to talk after. We got to talk.
that's holy cow. That's great. That's very attractive, very appealing for sure.
Yeah.
So I did want to ask you. I know some people in the industry are fairly hesitant with institutional capital lines of credit, just because in the housing crisis, 2008, 2007, a lot of those sources of capital dried up just because everyone was nervous. They don't know what's going to happen with the economy as a whole, and so people have said they're more comfortable with the private capital, just in the sense that it's up to you. You control it, and it doesn't necessarily dry up in an instant. I'm curious your perspective on that. Has that been your case? Does that make you nervous? Like, how do you guys operate?
Well, if I am, I want to make sure I'm clarifying your question. So you're telling me, for example, your 2 or 3 million, you're not even using any debt. You're just using that equity that you got to fund every loan. Am I correct?
Correct. Yeah, we're only using private capital at the moment.
So are you trading those loans in a matter of weeks, or it's on your balance sheet?
Yeah, we carry all the loans, and like we service them and everything from origination all the way to payoff.
Got you. So let's say you had a good month and you did your volume of $3 million. You can't fund anymore. Now your business is stopped, completely
Right.
stopped. So that's not a good thing. You always want your business growing and expanding. Uh, you know, I just came from a lender conference in Vegas. It was called D Bank, which was a merchant cash advance conference. But I'm constantly speaking at all kinds of lending conferences. And one thing I'll tell you is capital is out there, whether it's institutions, credit lines, wholesale lines, repo lines. They're out there. There's more capital than there are deals. So in your case, your equity is capped, and after you're funded them, your business has honestly just stopped. It's on pause.
Right.
That's not a good thing. So you want to have as much capital as you can have to continue your business, and our business is capital. So it's spend the money, and even if you're making some less returns, but now your volume is growing. Your volume is exponentially growing because it's the loan volume. It's more happy customers. You don't want a customer telling them, I can't fund your deal. I'm just capped out. Go to Express Capital. I mean, I'd love to hear that, but that's the last thing you want to say, especially after you build a relationship. So having the capital is not hard. Getting the customers is the difficult part.
Interesting, because the funny thing is, I keep hearing that is that like the profitable deals, the borrowers, the customers, that's the difficult part, but that's the exact opposite of what we're seeing. We have more deals than we do have capital. So
You're,
for
you
and
you're
I
right, but you're turning them down. Sounds like.
We are at the moment just because we don't have enough to keep
You're
up.
going to
Hmm.
use me now. We're going to work together.
Let's do it. Okay. So,
Where are you based out
so
of? You're based out
tell
of,
me this. Sorry,
where
go
are you
ahead.
based out of again? I forgot.
So we're in Idaho.
Idaho. Okay, got it.
Uh huh. So,
Got
selfishly, they're like I said, we're small, and we do have a decent number of listeners who are trying to grow their capital stack at the moment. Um, do you have any specific vendors or recommendations of partners that you've worked in the past to kind of sidestep that whole like capital raising point and tap into some of those lines of credit or wholesale lines or repo lines or anything like that?
No, it's strictly friends and family. And if you just want to go to accredited investors forum type of thing, there's iGlobal and family offices that you could go to meet some strategic accredited investors. It's a relationship that you're going to have to build, but you're going to have to show numbers, balance sheet, and things like that. Once they're enticed to do it, but it's definitely out there. It's definitely out there.
Gotcha. Okay.
And by the way, family offices, they are very much interested in real estate, whether it's a real estate project or real estate lending. They are open to it, but you just gotta, it's not, you gotta just have to find the right forum and get the right family. But they're out there.
Interesting. Okay. So as a follow up question to that, I'm sure that family offices get hundreds, if not thousands, of emails every week. Looking for where people looking for capital. So do you have any like tips or tricks to kind of like maybe speed up that process of building that relationship and the networking, just so that you're not another email. You're like actually a solid competitor who's can
Great
break through.
question, Bryce. Great question. So when I started this business, I just want to go back a little bit. I was canvassing the streets day and night, every networking event, every courthouse, every chamber of commerce, every rotary, until I built up a pipeline of people, to a pipeline of people. So based on your question, I would say don't do the emails, meet and greet them. And even if there are a lot of these events and forums, some of them are not even in the US. They're in the UK, they're in China and all
Mm,
that. Yes, it's going to spend, but you're going to have to go out there. And, my son was just like, believe it or not, like 2 years ago, he was like, let's just focus on the USA, Florida, Jersey, New York, we'll go to those forums. And when I enlightened and opened up his mind, we're going to have to go to the UK and China and all that. And he saw the potential and he sees what's happening now. So it's a cost, but like every other business, if you spend right, you have to spend money to make money, and you got to do your necessary actions to get there with a plan, with the proper plan. But I'm confident you'll get there if you have a plan in action. Sometimes tweak it, but at the same time, you got to meet and greet versus that generic email. Yeah, I believe in handshakes, meeting, and they feel more comfortable and all that type of stuff. And more importantly, when you're going out there, whether it's domestic or international, making that connection. When can I call you again? When would be the right time for us to connect? Like, I don't just take their cards and talk for 20 minutes. I want to know, hey, can I call you when I get back to the States in 2 days and have a nice actual Zoom interview to recap our conversation?
mm.
Not just a phone call because they're going to forget. I want them to remember my face, my company, and things like that.
I love it. I love it. That's very good advice. Very good advice. Just yeah, like old school, right? Just like shake hands. And I know in this day and age that's hard to believe that, you can actually build these real relationships in person. But yeah, that's how you do it. Very, very good advice.
Mhm.
Okay, I did want to ask you, and I know you touched on this briefly. You said correct me if I'm wrong. You said 13 years you were kind of brokering deals until you became a direct lender yourself. Can you give me kind of the backstory? Like, what was the catalyst for you to begin brokering deals? What was your journey like throughout that whole thing? And then what was the tipping point to stop brokering the deals and start funding them and lending on them yourself?
Yeah. So just a correction. I'm in business 13 years. The first four, I was brokering. The past nine, I became an actual direct lender.
Got it.
So I started in my mother-in-law's basement. Like I said, I was a successful retailer. I had 4 stores, and many years ago, the writing was on the wall. The rents were too high. The big box stores were killing. Amazon and a lot of things were just affecting retail, where it was time to get out. And about a year later, I joined a company who taught me financing. They taught you everything from merchant cash advance, SBA, equipment financing, hard money, and all that. And I paid for the course of 1 week. It was called Commercial Capital Training Group. They no longer exist. But they were based out in Albany. And when I came back, I didn't know what the heck to do. I learned all these products and programs. I didn't know what to do. And I worked out in my mother-in-law's basement. The reason why I'm saying my mother-in-law, I don't want to be home and get depressed and get sad. So I just figured, let me have a different atmosphere. My younger son came with me to the house, and we just made a lot of phone calls from merchant cash advance to equipment. We tried everything. But this company also, because I paid for it, I paid for marketing and a lot of money for $50,000 for 2 years. And by accident, they marketed me for commercial real estate. It was just an accident.
Oh,
And I
wow.
got my first hit. I did a commercial property in Florida, and I happened to have brokered it, and I made some money on it, maybe a $500,000 deal. I don't remember the logistics, maybe 2 points, 10 grand, 15 grand. I made on it. And being a retailer, I know about square footage, I know about location, I know about rents. Of course, not in every city or state, but I'm familiar with real estate. So I said, you know what? I want to keep up the real estate financing versus merchant cash advance or equipment or SBA. And I tried a lot of them, and I wasn't successful. And they always say, do what you like. Some people say, do what you know, but I believe in do what you like. And I like this because I was familiar with real estate, being an investor and being a retailer. So from then on, we switched our marketing to real estate, and that's when that first 4 years kicked in, where I was just brokering it. Kiavi today is Kiavi. Years ago, it was called Lending One or Lending Home. I would broker
Ah,
to them and RCN, but my son was very unique, where he would learn how to underwrite the deal. He didn't just give him the deal and give us terms and that's it. He would learn to underwrite. He got very friendly with the underwriters, with these lenders, and learn how to underwrite. And in that 4 year transition, he was starting to underwrite and now give the lenders a clean deal, where just give us the terms. In the beginning, the lenders say, you're missing this, you're missing this, you're missing that. But then he learned where now our submissions were 100% foolproof, and those loan originators and processors loved us, and they were giving us their first attention. Take it 4 years later, we finally hit families and friends and all that, and they started to trust us with their capital. We showed them our loan tape, what our capabilities are. I mean, maybe our first fund was maybe $500,000. We grew, we grew, we grew, and our second fund maybe was like $4 or $5 million. But we
okay.
decided, in the past few years to do a 506C. So it's all about the loan tape. It's about the submissions. It's learning the process, and they loved our performance, those loan lenders. And now when I work with brokers, and when I see a clean submission, like, he's top priority to me. And it reminds me, like, wow, this was me years ago versus me 13 years ago. So I hope that
Beautiful.
answered your question.
No, very, very good answer. Wow. Okay, because I know there are a lot of people in the broker space, and there's absolutely a place for that, and everybody needs to work with brokers. I believe, just because you got to have that regular, steady pipeline of deals coming in, and you want to obviously garnish those relationships and grow them and make sure that that's something that you have as a piece of your business. What's the difference between like a good broker versus like a bad broker? Because I'm sure you've seen a little bit of everything. Like if you had a broker on like a silver platter, and they came to you, what does that look like versus somebody that you're like, oh my gosh, I don't want to deal with these kind of
Yeah,
people.
it's funny. This was exactly my conversation a few days ago at the forum. There was a room, maybe 100 people full of brokers, doing merchant cash advance and all that. So what I constantly say is, and again, I like to learn from my mistakes. And a lot of lenders, when I was sending them deals, they wouldn't call me back, they wouldn't talk to me, they wouldn't respond. I walked into their office. I would drive hours just to walk in and say, what did I do wrong? Teach me and help me and all that type of stuff. And some of them were helpful, and they told me just your submissions were crap, and they were not even bothering answering. Some of them were, like I said, they were helping me and saying you didn't fill in the application completely. If an answer was there, if a question was there, liquidity or network or net worth or experience, and you left it blank, well, why would I look at your deal? You're just a,
Mm,
unqualified broker. So I learned through my process. I learned from my mistakes. I do a lot of book reading to educate myself, and I learned the process. Like I said, some lenders didn't answer me. No, no worries. I at the beginning I got upset, but then I said, Marty, don't get upset. It's something's wrong with me and not them. And I learned from my mistakes. I learned from what they taught me. But having a good broker is submitting a clean deal, whether it's my application, their application. And a lot of times when I send brokers my application and it comes back to me, what they're simply doing, Bryce, is just forwarding it to the customer. The customer fills in half the paperwork. The broker gets it back, doesn't even look at it and look to make sure it's clean, and then forwards it back to me. I don't
Mm-hmm.
want to work with that broker. I give it to one of my LOs and let him handle that crap. Why do I say it's crap? Because if you can't do the work, you don't want to make the money. It's not going to get nowhere. To me, my time is very valuable. If you're going to do the work, it means you want to make the money and you're responsible. Now I'm going to work on your deal. But if you're just half-ass doing the job, it's just not going to get anywhere.
Mm.
Broker chains also, Bryce, I stay away from because they have two or three brokers. They all got, their heads up in the air. I want to make 2 points each. They forgot about the lender. And then I got to answer to multiple brokers. And then the client's not going to pay these
Ah.
extravagant, fees and all that. So broker chains, not our cup of tea whatsoever. And I
Mm.
learned from my mistakes. I learned from my mistakes.
That's beautiful. My goodness. Ooh, that is really good advice. And like, unfortunately, like you would think that would be common sense, like, hey, fill out the damn form and imagine that, like you'll actually get what you need. But in this day and age, I think that's probably more rare than it should be.
Yeah.
Tell me. So imagine I'm a broker. I have a borrower. I come to you and say, I've got this borrower. It's a really good deal. Like LTV is 70%, solid financials. Say I come to you. What kind of fee structure would do you typically do? Like how do you pass that on to the borrower? Is it competitive? What give me that explain that whole process to me as if I were a broker.
Well, I always ask my brokers, first of all, what are the client's expectations? Rates, terms, leverage, points, what's their expectations? Because in the hard money realm right now, everybody is 10, 11%.
Hmm.
Points, I could be anything from 1% plus. So I always like to hear the client's expectations, not even from a broker, but even my client, my direct B2C. What are you looking to? What are you looking for as far as rates, leverage, and points? If we're not in the same mindset, a lot of the brokers slash clients say, I want to pay five. This morning, I had a client who said to me, I want to pay 9% on a multifamily deal and 1 point. And, I know my multifamily bridge is going to be somewhere in the 10, 11%. I didn't just tell him this, and this is a client. I said, look, I need to see the deal. I don't want to hurt myself and undercut, and I don't want to oversell and hurt myself too. So if you send me the deal, I can take a look at it and define it. So that's the way I like to find out. And if we're in line, like I said, they're on the hard money side, we're anywhere from 10, 11%. And I always tell the clients the rate is not the most important thing because if you take a 10% factor for 6 months, you're looking at 5%. So it's no prepayment penalty and it's interest
Mm.
only. And more importantly, there's no minimum interest. A lot of lenders take 6 months of minimum interest, 9 months of minimum interest, where they want to
Right.
guarantee make on their money. We don't have any of that. Like I had a customer yesterday who got a 10.75 and I was 11.5%. And I said, dude, it's a difference of $200 more a month with me, but I'm giving you more leverage. And at the same time, you're coming up with 6 months of minimum interest, $58,200. Because what's the difference? I'm paying it anyway, but you're coming up with it at closing. Why should your money be tied up at closing? Have your money work for you in the next 6 months. Cash is king. So, it's explaining the value. I always say, in business and especially in this industry, yes, everybody is so thoughtful on the rate and points, but think about what the product and the program could do for you versus the rate and points. But there is no lender that's 10, 11, or 12 in the industry, and one is at 5, 6, or 7. It's not out there. People think it is. But also
Right.
their mindset, Bryce, when they're hearing 11 or 12, they're thinking it's 30 years. And I'm saying, stop, it's 12 months. And if you're in the deal for 6 months, you paid 5.5%. So think about the 90% I'm giving you versus the 11% annually or 5.5% semi-annually. Because their mindset just hears 12. They don't hear
Ooh,
5.5%.
that's that's huge. I love that. That's a great nugget. Like a lot of ooh, I'm going to start using that. That's beautiful because a lot of I think one thing. So for to give us just a little bit of background. So we personally we've done probably 75 or 80 different flip projects before we even started lending. A lot of times when people come to us with a deal, I can tell them right off the bat, look, this does or does not make sense. It typically within 10 seconds, because we know the numbers, we know our backyard, like, and I think that having that skill is a lot more valuable to the borrower than people realize because you can look at that deal and be like, I would not touch this with a 10-foot pole because it just doesn't make sense. And so a lot of times that education piece is very valuable to the borrower, even if they don't really understand that in the moment. That's beautiful. I think that's such a great way to position it. Like, look, if you pay this off in 6 months, you're really only paying 5-6%. Like, let's quit worrying about the minutia and the tiny little details when, like, we're talking big numbers here, and you could have a big exit and make a lot of profit.
Yeah. And whenever they dispute me on the rate and the points, and I'll just come back to them and say, sure, I'll lower the leverage. If you want to pay less points, I'll give you lower leverage. But giving you more leverage, another thing I tell them, Bryce, is if you have 100,000 cash and you're going to make on a property 100 grand, you made 100% return. 100,000 cash, you're putting it in, you're going to make 100 grand, you made 100% return. But if you use OPM, other people's money, and you leverage, now you put down 10%, $10,000 on the same deal, you made 1,000% return.
Right.
1,000% return, and your other 90,000 should be diversified, not sitting in the bank. Stocks, bonds, bitcoins, other real estate projects. So they're not, they don't think, you got to get them off the rate and the points and get them more onto what the product could do for them.
There's so much more to it than that. That's beautiful. I love that. Okay. I did want to dive in briefly on you mentioned something interesting about Home Depot and how you have a pretty good hookup with some discounts. Can you go over that and kind of explain your unique value proposition and how that could help borrowers?
Yeah, so on our website, which is expresscapitalfinancing.com, we have some good affiliate partners. So one of them is the Home Depot. We have a connection where we give our borrowers, once they close their first deal, up to a 30% discount on materials only. It's materials only, and it's up to certain categories would be 5, 10. So it's up to 30%. And they love it. And it's not just used on that one property, it's their card for forever, but they do have to close their first deal with us. So that's one
Mm,
of the many affiliates that we have on our website. If you don't mind, I'll just add for 30 seconds or 15 seconds. We have
absolutely, by all
great,
means.
thank you, I appreciate that. Other affiliate partners that could find properties for our investors like Hubzu, Foreclosure Daily, Deal Machine, a lot of these great websites that they could find, to either market their business, find distressed properties, do mailers, do postcards, and things like that. And we do podcast a lot with those other vendors, and we like to bring value to our clients. And that's what we're trying to do.
Marty, you are a treasure trove of information. This is this is so great. There's so many times that I speak with borrowers and they're like, just going back to your previous point, where they said like, well, this guy will give me 10 and a half and you're charging 12. But like, there's so much more to it that like, quit thinking about the front end and all the value that you can provide on the back end. And especially with these affiliates and these partners, like, I mean, we've done renovations that have cost 150 to $200,000. Think about the 30% that you could save on materials from Home Depot alone. I mean, that's is that worth the difference between
Of
1%?
course it is. I always tell the people
Absolutely, it's a no
I like
brainer.
out the points dramatically. And like I told my customer yesterday, here's his here's his term sheet without showing the vendor, 10.5% and 10.75. And I'm telling him my rate is 11.75. And I showed him the math. You're talking $252 a month. You're going to be how long in the deal? For 6 months? You're talking $1,500? Dude, yes, everything was the same leverage, but 6 months of minimum interest. And by the way, the rate floats after 6 months also. So your rate in the seventh month is going to be much higher than probably 11 or 12. So
Mm.
people just, they're so fixated on the rate. I don't know. Got to get them off it. I learned in a lot of my book and educational learning is disrupt their thought pattern and paint a better picture for them.
Mm.
Disrupt their thought pattern and paint a better picture where maybe higher leverage, quicker closing. So besides my Home Depot up to 30% off, we also give them a line of credit. That means unlimited amount of deals, unlimited amount of transactions, and unlimited amount of financing once they close their first deal. Because a lot of lenders, they cap it at 2 or 3 deals, $2 or $3 million, and they don't even know that. The borrowers don't even know that. But with us, we tell them we don't cap you. So you could do, you know, 4 deals in one day, or you know what I'm saying, or many deals throughout the year.
Oh my goodness. Okay, Marty, I've got so many more questions for you, but I'll be conscious of your time because
Okay.
this is a gold mine. This is so great. Okay. Tell me a little bit about like what's next for you? What's your 5 year, 10 year goal? Like where do you see yourself?
So I'm very goal oriented. My The bigger lenders out there, I don't want to say their name, but they're doing about 100 to 150 million a month. I happen to be very good friends with two of them that are very big out there today, and they kind of tell me, what they do and all that, and I do appreciate their advice, like I'm sharing here on the podcast as well too. I believe in sharing the wealth, sharing the advice, and all that. My goal is to get to where they are today, and that's about 100 to 150 million. Where volume right now is about our volume is about 30, 35 million. So I have about 4 to 5x more to do that, and we're constantly growing our team. In Brooklyn, we just opened up a new, bigger, larger office that could fit about 40 more people. So that's our goal. We're hiring a business developer, a manager, and my office over here in Jersey could fit about 10, and about 4 spaces are filled up. So we're looking to 45 more people. We just hired a new processor, so we got about 11 processors now. My goal is to get to 100, 150 a month. I don't know. I don't know. Maybe sell at that time. Maybe just merge with a larger company. I don't know. I'm happy to say companies are reaching out to us to purchase, acquire my company, but I don't want that. I don't want that. I want a bigger conglomerate company to buy me, if anything.
That's beautiful. Given the information that you've shared with me already so far, I have not a single doubt in my mind that you'll get there. That's amazing. I mean, a lot of people scoff at a 4 or 5x, but clearly you've got the expertise and the knowledge and the gusto to make sure that that happens. So I have no doubt in my mind that you'll hit that.
Hmm.
Two or three more questions here, and then I'll like I said, I want to be conscious of your time. I'll let you go.
Yeah.
Um, if you could go back in time 20 years ago to your former self, or even just speaking to me as a newer excuse me, as a newer lender, what one or two tips or tricks of advice would you give me and recommend to either sidestep the process or grow or scale faster, or to maybe not make as many mistakes or a big flop, or any advice that comes to mind to help us grow?
Always be learning. ABL, always be learning. It's not always about ABC, always be closing. It's learning. You know,
Mm,
being an entrepreneur is not easy. You're an owner of a company, so you got the sales side, you got the back office side, you got operations. So people think that they always want to become an owner. Is it greater wealth? Yes, if you know how to handle a business. I'm happy to say that when I was, 20 years old, my dad put me into the retail business with him, and from there I grew from one store to 4 stores myself. Did he kill me? Yes, I made a lot of mistakes, but I believe mistakes are an experience learning curve. That's what I believe in. I'm a very big advocate of franchising in the franchise retail space. At the same time, I'm not, because I'm going to tell you why it's a little bit an oxymoron. Because when potential franchisees are paying hundreds of thousands, if not $1 million on a franchise, what are they doing? They're taking the owner's experience and putting it into the new person. However, experience yourself will get you there at a cheaper cost and probably more quicker. Because when you have a problem, yes, you're going to call headquarters, but when you have a problem in your own business, you're going to be talking to your friends or neighbor or your local competition or whatever it may be. So always be learning. It's being an entrepreneur, talking to your staff, your back office, your front office staff. My two boys are very a little bit more softer than me in a good way, where they're very they want the team to stay. It's not always about the money. They're very warm team leadership environment. They want them happy. They can get offers in a lot of different places, but if they make them happy, whether it's events, going out, bowling night, I don't know, whatever they do, they do. I don't even know what they do, but they want to make them happy. Dad, I don't want my staff to leave. And a lot of my processors have been with me for the past 8 years out of the 13, 9 years out of the 13. It's not always about the salary. It's about how nice we are and how well we take care of them. So
Wow.
learning, educating yourself, podcast, YouTube, learning the products, learning the programs. You know, I'm very tough and strict on my staff, my LOs, learning and educating them because even after our training, we do something called a continuous education for 90 days. Once a week, we do it because after 5 days of training, they're forgetting half the stuff that they learned. And we realized a lot of them were failing and leaving. So I decided to make a continuous education class once a week for 90 days. And we talk about products, programs, applications, updates to our process, whatever it may be. And it's becoming more helpful. So I hope I gave you enough information there.
No, that's beautiful. So many little nuggets that are huge. I heard a quote once that said, "We need to be reminded more often than we need to be taught." And I think that's exactly what you're talking about, is just like kind of drilling those things into the team. Like it's not new stuff, but we get so focused on different things or distracted, or we just like, we kind of get our heads in the weeds and we forget about the bigger picture sometimes. And I think that, continuing education and continuous training and always like reiterating the main points, I think that's gold. It's
Yep,
beautiful. I
yep,
love it. I love
yep,
it.
yep, yep.
Marty, seriously, thank you. I would love to like grill you for another 2 hours because I have so many questions, but I want to
Let's
be
go whenever.
conscious of
I'm
your
ready.
of
I'll
your
do one in
time.
the next
So
few weeks. I'm ready.
yeah, we might have to do a follow-up episode to this because this
You
is
got it. You got it.
this is amazing.
Yes.
For anybody who wants to maybe get in contact with you, whether that's for loan purposes or pick your brain or become a partner or take advantage of some of your affiliates, what's the like pitch your socials, what's the best way to get in
So our
contact with you?
website again is expresscapitalfinancing.com. Our main office number is 718-285-0806. That's the main line. If they want to reach me directly, my office line is 201-603-2370. And Bryce, I'd just like to add something that we also now we're becoming somewhat of the bigger guys where we're table funding small loan brokers. And what that means is that the clients will never know Express Capital Financing. It's a generic name that we use. So the broker is going to advertise it as our generic name. And this way the client never knows about it. We could table fund their fix and flips, ground up construction, 30-year perm, and commercial properties 30-year. So we could do it all for them.
Amazing. Amazing. That is such a huge resource. Okay. Hopefully, well, I think I'm personally going to be sending some business your way, and hopefully some listeners of the podcast will do the same. So,
Appreciate that. Appreciate that.
Marty, seriously, thank you so much for your time. This has been invaluable, just
Thank
incredible.
you.
Really,
Thank you.
really appreciate it.
And if you could just reach out to me, maybe on Monday, so to have a little private chat, I'd love that.
Let's do it. Yeah, I'll
Okay,
do
you
that.
got it. Send me an
Okay, for
invite.
everybody listening, I appreciate your time. Thanks for tuning in to the Lender Podcast, and we will talk to you next week.
Great. Thank you so much. Bye-bye.